Welcome to Dalrymple Trading. My name's Nandis. Today is 23rd of October 2025. Just here to look at the pre-market analysis for a couple of instruments today, the S&P, gold, crude oil, and Bitcoin. To all my listeners and followers, just letting you know that I had taken a week and a half off to attend to some personal matters. Now I'm back going through the charts with you guys. So apologies for not being able to upload any videos earlier. I'm sure some of you guys would have been keeping an eye out and looking out for that. And some people even reached out to me asking where the updates were. So I'm really excited to get back into it and give you guys my analysis for today and where I see the markets heading. So I think what we'll do, we'll start off with the S&P 500. So as you guys can see here, we've got a base at 65.75 where prices obviously plunge below that well and truly into the 6500 range, but that is a range nonetheless, 65.75. And now on the top side, we've got a high of 67.50 at the moment. So you can see that the prices try to break out above that 67.50 multiple times, going far back as October, beginning of October. So we saw there on the 9th of October, followed by the 10th of October, then more recently the 21st of October, 22nd, and so forth. And obviously we're trying again. But there's something that's not looking right in this chart, and that's the fact that we're unable to break above that 67.50 level, right? One of the reasons here, I think, is because of the ongoing tensions between the US and China in terms of the tariff war. Okay, I think that's really put a dampener on where the S&P can go upwards. So if you're an investor, it's also time to be cautious as well, because this market, unless it breaks out to all-time new highs, it's currently on a pause. It's more going sideways. If we look at all this price action, we've seen sideways price movement this whole time. One thing to keep in mind that I've outlined here is that when we hit that low back on the 17th of October, we actually didn't completely fill that gap. So if you recall, we had that big plunge overnight in trading, and then we gapped up. So part of that gap was filled on the 17th, but the gap between here and here hasn't been done. So to me, that's some unfinished business. Now, there's a very strong possibility at some point in the future, this chart will go and fill that gap. Now, could it be this week? Could it be next week? It's hard to say. Okay. Um, or we might not. But because that's unfinished business, there's a high chance that that level will get tested again. And that level is approximately 64.98, 6,500 even. So that level at some point may get tested because this last attempt to test it wasn't successful. The bulls took control and pushed prices higher. So the question now is, can the bears push prices down, retest, maybe go a little bit lower, and then after that we can see what happens. But the macroeconomic picture is still that these sanctions, these trade, not sanctions, sorry, the trade war between the US and China is still ongoing. So I think that's obviously giving a lot of uncertainty to this market, and that's why we're seeing this sideways action. So if you're an investor, maybe a time to sort of stay on the sidelines until we see a continuation to the upside. At the moment, I am still um, bearish on this market, and I have been since the start of October. My position is still bearish overall. When I mean by my position, I'm talking from a swing trading, longer term perspective. Of course, intraday trading, there's always opportunities to buy into this market. That's not what I'm referring to here. If you're a swing trader or an investor, at the moment is not a time to necessarily go long because there's something not right about this chart, like I've just explained, and we just got to keep conscious of the fact that there's a couple of things that need to be sorted out, including this gap here, before we can see sort of any continuation to the upside or be confident that that's the case. So moving later on to gold. So we saw a big dip in gold. We corrected back to the 4050 level, 4050, and now we're trying to find support there. My outlook on gold is still bullish in the longer term. I do think this is a lot of profit taking that's been happening. I think a lot of the world had gone crazy on buying gold. Now, had you approached this chart by placing stop losses correctly, most likely you would have survived this brutal crash. If you didn't have a stop loss and you were invested, obviously then you would have to wear the downturn. So where do I think this is heading? Well, I do think we'll continue to gravitate around this 4,000 to 4,050 level before we see more upside. If we do break down for whatever reason, then support is at 3,900. But at this point, as long as we can hold about the $4,000 mark, I think we should see further upside as we go. Because fundamentally, the story for gold hasn't changed, right? The weakening US dollar, issues with the US economy, all of these things are still very bullish for gold. So if you are a trader or an investor, it's all matter of just making sure that you're actually calculating your risk to reward correctly so you don't get wiped out should another correction happen. So, again, you want to buy when there is a pullback in prices. So, if you can wait for another pullback and then buy again, it's probably another a good place to be. But again, we still need to see a little bit more strengthening before we can say we're back in the clear again with gold. Crude oil. So we saw crude oil dip all the way down to $56, which was the low, and then we obviously went up from here. So the reason we saw this multi-day price increase was due to Donald Trump announcing stricter sanctions on Russian oil, which we will delve into a little bit further in the presentation today. But essentially, where I'm seeing this, we're very extended with oil prices at the moment. We're hitting that 60 level, which is also a resistance level from prior. So in the medium to short term, I'm expecting prices to go up and then back to the moving average, and then we may go higher. Um, Very extended, so we do need to get some sort of correction for another push higher. So that's where we're sitting with crude oil. Looking at Bitcoin, interesting story. So we collapsed from all-time highs of 125,000 US to 105,000. Then we tried to rally, okay, break above 115, failed, and now we're sitting in the middle of this range between 105 and 110. And to me, this is not showing any bullish momentum at the moment. From an intraday perspective, if you're a short-term trader, sure, you can trade this on the minute chart, but as an investor, we're still not in the clear with Bitcoin at all. This rings very similar to the S&P 500, which is that sort of sideways churning action. That's what we're seeing in Bitcoin as well. So if I was an investor, I'd be on the sidelines until we see a change in price structure. For now, it's just a grind sideways. So if you are going to trade this, got to be very careful because I expect further sideways action, unless, of course, we break above that 110 level and maintain that move, unlike here, which was rejected at 115. So if we can maintain that move to the upside, of course, but for now, I'd very much be on the sidelines with Bitcoin if you are an investor on this one. So just looking at a couple of market outlook announcements. So here's the price movement of Bitcoin. So we saw that in August, sorry, mid-August, we hit 122. Then we hit 105 roughly, and then we went back to 125, back to that same 105, and now we're hovering. So again, just goes to show that we are in a sideways pattern with Bitcoin. From even from a macroeconomic perspective, um, we know that Bitcoin is very correlated to market movements. Like we saw that when the S&P dipped, Bitcoin dipped too. So for those that think that Bitcoin is always a hedge against the S&P, from what we've seen, it's not really. So that's something that we need to be aware of. Looking at the current market situation, I've sort of summarized a couple of the articles that I saw across various news outlets just to give you guys an update on what's happening at the moment. So overnight, US tech stocks fell after reports that Donald Trump may restrict software-related exports to China, escalating an ongoing trade conflict, which is what we've been talking about. So proposed export controls and tariff threats. The new restrictions would cover products made with US software, such as medical devices, jet engines, and laptops. In response, China to curb on rare earth exports. Trump also warned of tariffs of up to 100% on Chinese imports by November the 1st. So that's the deadline that we've been talking about, right? Now, of course, if Donald Trump does backtrack on his um, on his tariffs on November the 1st, we should see the market rally because obviously the tariffs are going to be negotiated. That's bullish for the market, and the market will go higher. But that's why we're in that holding pattern, I guess, until we hit that 1st of November. So market reactions, obviously Nasdaq dropped 0.9%, leading declines across major indexes. S&P down 0.5, Dow Jones 0.7. Plantier tells Tesla and Netflix were among the biggest movers, with Netflix plunging 10% after weak earnings. Broader market weakness, so losses extended beyond tech. So 11 S&P 500 sectors fell. Stocks like Robinhood 3.5%, Beyond Meat 1.1%, which had soared earlier in the year, saw declines amid signs of profit taking by fund managers. So commodities and investor sentiment. Gold futures slipped by 1.1% to just above 4,044 per ounce, continuing a sell-off as investors adjusted positions. Analysts warned that renewed trade uncertainty could trigger short-term volatility and broader market correction. So with gold, like I said, I still have a bullish bias to this. It's just a lot of profit taking from the last couple of months of a very, very strong bull market with gold. So looking at the, sorry, let's jump into crude oil first. So this is just an analysis of what's happening with crude oil. So President Trump announced sweeping new sanctions on Russia's largest oil companies, Lukoil and Rosenfeld, making the first major U.S. measures against Moscow during his second administration. There's also economic isolation measures. The sanctions fully block transactions in US dollars and threaten secondary sanctions on foreign banks, traders, and refineries doing business with Russian oil sector, potentially cutting it off from much of the global financial system. Pressure for ceasefire in Ukraine. Trump said that action was taken to pressure Russia into agreeing to an immediate ceasefire in Ukraine after negotiations stalled. Treasury and state officials warned that more sanctions could follow if Moscow doesn't move towards peace. Global coordination and EU action. The UK and EU simultaneously expanded their own sanctions on Russian oil companies, with Brussels preparing a 19 sanctions package, including bans on Russian natural gas imports and measures targeting Chinese and Indian entities aiding Moscow. Domestic and international response. The sanctions drew bipartisan US support, with lawmakers emphasizing unity against Russian aggression. Analysts expect the move to cripple Russian oil revenues, pressuring President Putin to negotiate an end to the war. So we can see that there's a geopolitical dimension to what's happening with crude oil at the moment. Couple of things that to keep in mind here as well. So because there's so many sanctions that's happening on oil, specifically in terms of freezing the US dollar and not allowing countries to trade in the US dollar, this is not a good thing for the US dollar, because the US dollar is very untrustworthy now for foreign governments. Because at any point in time, should America not like what you're doing, they can just seize all your currency or allow you not to trade in those sort of currencies, specifically the dollar. That's why a lot of other countries now are adapting other currencies and trading amongst themselves, which is also another strengthening of weakening of the US dollar in the long term, because it just can't be trusted. That's another, call out that I really want to make in terms of these sanctions. So we do see these sanctions going up. Yet obviously, we will see prices going higher in crude oil because of this, because it's a supply side issue now with more sanctions on Russian oil. Other countries now have to increase output to make up for that shortfall. And countries like India and China still buy Russian oil. So if they're not allowed to buy it, or they cave into Trump's pressure, then they need to obviously go to the open market to buy more crude oil, which, you know, should lift the price of crude oil going forward. But short term, like I mentioned in my analysis, we should see a small correction back into the range before we push higher. Now, looking at the weekly economic calendar, the big report is on the 24th of October. CPI is coming out, so that should have an impact on the S&P 500. As you can see, we've got the unemployment due on the 23rd, and yeah, the biggest ones are definitely the 24th and the unemployment report on the 23rd. But I think overarching all of this is the issues with China and the US, which hopefully should come to an end by the 1st of November. I'm seeing that Donald Trump, given his past, will probably negotiate, and we should see markets rally to the upside. But who knows? We have to see we have to see what he does at that point in time. So that's my analysis for today. I hope to keep you guys updated as we go on throughout the trading week. Have a good week.